I hope you got some eye-opening thoughts from the last exercise. There are many different options that open up to you when you have your own business. The last one is the simplest form of tax savings. As you grow your income and your wealth, you will begin to realize that the biggest expense you will ever have is taxes. And by finding a way to minimize them, you can put that money to work for yourself. I was watching the news the other day, and they were talking about cash money stores and how they were exploiting people by charging such outrageous fees to people. The cash money stores end up having fees that amount in some cases to over 50 to 60%. That is a lot of money, and please, if you have ever in the past, do not ever use a cash money store. In the back of my mind though, after watching this, all I could think about is why is it that the government is allowed to charge the exact same rates to people, but there's no protest to them, and we don't even have a choice? Well, I want to give you a choice today. When you have your own business, you can choose to set it up a couple of different ways. One way is a sole proprietorship. That is where you are the sole owner of your business and you take on 100% of the liability, which we're going to talk about in the upcoming videos, and you get the tax advantages that we spoke about. It allows you to save on some of your normal expenses. It can help get you into a lower or more preferential tax bracket. Another way to set up your business is a corporation. A corporation is a separate legal entity from yourself. The two major benefits with a corporation is that you're able to reduce liability greatly if set up correctly, and even more so, the tax advantages can be amazing. Currently, a corporation in Ontario will only pay approximately 17% tax on the income it generates. Whereas on the personal side, you are paying in some cases more than double that. Now, depending on the type of business you have, you may be able to save an extraordinary amount of tax by having a corporation. Let's use the $100,000 example again from the last video. If you had a business and were making 100 grand in a corporation and the expenses again were the same 25,000 and your income was 75, your tax at 17% would be just under $13,000, which would leave you with about 62,000. If you were a sole proprietor, you would be left with 48,000. Not too bad so far. However, in a corporate structure, you will encounter what they call double taxation. Don't be afraid of this. What that means is that you will have to pay tax on the money that you take out of the corporation as well. So, if Brian Hogbin then takes money out from Brian Hogbin Corporation, Brian Hogbin will then have to pay tax on it. Two major benefits are available in this situation. As you are a savvy money manager on your mission, and you can live off, let's say, $40,000 for the year, you can leave the difference of that $22,000 in your company and let it grow tax-free. Or even better, reinvest it into your company that you love and that's your passion you're growing. Now, the money that you take personally, or in this case, let's say the money that Brian Hogbin takes, can be taken in a couple of different ways. One way is by the form of income, which is taxed at the regular tax rates. The $40,000 would then have approximately 29% tax taken off it, or almost $12,000. The total tax that you would pay in this case would be the corporate tax of 13 plus the 12, which would be about $25,000. If you recall, as a sole proprietor, in the same example, you would be paying approximately $27,000. Another savings, okay? But you still have over $20,000 left in your company. It's a big difference. Another way that Brian Hogbin can take his money is by the way of a dividend. A dividend is just another form of remuneration, or in other words, income, that you are able to take under the tax code. Now, if I were to take a dividend of $40,000, it would result in almost half the tax payable as what you would pay in regards to regular income. That means that in this case, your tax would be approximately only 6 grand instead of almost 12, which equals more money in your pocket. The big number to remember here is that in the corporate structure, with all other things being equal, on $100,000 income, you could keep over $22,000 in your company to grow tax-free and have $34,000 in your pocket. This means that from that $100,000, you have $56,000 of savings or disposable income after your expenses instead of 30, that's almost double. Now this one has been a lot of numbers, so I just want to recap the highlights. If you have a corporation set up for your business, you are able to not only save on the taxes you pay, you're also able to save money in the corporation at a cheaper tax rate and pay yourself a dividend, which will in turn save you even more money. When I was leaving my job and going out on my own, this was one of the major factors that played in my decision. I would have to make far less money in order to keep the same amount of money in my pocket. This again, coming down to choices and lifestyle, meant working smarter on my own terms than for someone else. Now, this does not apply strictly for rental properties. We spoke in the real estate section about not incorporating for rentals. Only if your real estate portfolio is big enough to be considered an active business can you use this structure. Otherwise, you put yourself at risk of an audit and not getting the tax benefits we just spoke of. Please check with your accountant depending on your situation. We have great resources. If you want to check out with us, we can put you in touch with the right people. So your accountability assignment, I want you to meet with an accountant and pay them for their time. Do not go looking for a handout for free advice from them. As you know what? You get what you pay for. For the small business, commission-based job, or network marketing business that you have been exposed to, find out what you can save. I want you to send in 3 illuminations that you got from meeting with your accountant. If you can find out how to save money now by saving on taxes, you can keep more of your hard-earned money and have it work even harder for you on your mission while you're sleeping. This one has a lot to it, so again, listen to this one 3 or 4 more times in order to make sure that you get it. Keep up the great work and make this a fabulous day.